Hello traders, welcome back to the Forex Gig where we explore strategies to help you make more informed trading decisions. And in today's video, we are going to be diving into the simple momentum strategies for beginners. This strategy is designed to help you to identify simple momentum indicators that could help you navigate the market. Whether you're a beginner or an experienced trader, this method will add a new dimension to your technical analysis. So let's get started. We start by understanding the simple momentum strategy for beginners. The simple momentum strategy is one of the easiest and most effective way to start trading. At its core, this strategy revolves around the concept of momentum, identifying when the market is moving strongly in one direction or capitalizing on that move. I repeat, it helps you to identify when the market is moving strongly in one direction and helps you to capitalize on that move. This ideal is simple: buy when price is rising and sell when price is falling. This approach works because strong trends often attract more traders, reinforcing the price movement and creating further momentum. To implement these strategies, you will need to use technical indicators that help you measure momentum and identify trends. One of the most popular tools is the moving average, which smoothens out price data to reveal the overall direction of the market. By adding two moving averages, one with a shorter period and one with a longer period, you can easily spot the potential entries when the short moving average crosses above or below the longer one. For example, a bullish crossover signals a upward trend, while a bearish crossover signals a downtrend. Another useful indicator for this strategy is the relative strength index, which measures the speed and change in price movement. The RSI helps you to determine which asset is overbought or oversold, providing additional confirmation for your trade. For instance, if the RSI shows an oversold condition when price is starting to rise, it could signal a good opportunity to buy. And as you can see, this is an oversold region at this area, signaling price to rise, and after the oversold region, price it rose to the upside. When using this strategy, timing your entries and exits is crucial. You should enter a trade when the momentum is strong, and you should exit a trade as soon as it begins to weakening. For example, if price is trending upward and you see a bullish crossover or an RSI confirmation, you can enter a long position. However, if the momentum starts to fade, such as when the RSI approaches the overbought region or level, or moving average flatness, you should consider exiting your locked in gains. Now, risk management is equally important in momentum trading. Always set a stop loss order to protect yourself from unexpected reversals. A good rule of thumb is to place your stop loss just below recent support levels or above recent resistance levels for short trade. This ensures that your losses are limited while allowing your profits to run during strong trend. The simple momentum strategy is ideal for beginners because it focuses on clear signals and straightforward rules. By combining these two with your moving average and your RSI with disciplined risk management, you can confidently navigate the market trends and build your trading skill over time. Now let's see how we can use the simple momentum strategies for beginners. Now that we understand the simple momentum strategy. Let's explore how to implement it effectively in our trading. The strategy is designed to help you capitalize on strong market trends and make informed decisions based on price momentum. To begin, you will need to set up your chart with a necessary indicator. We start by applying the two moving averages to your chart, which are the short term and the long term moving average, which I have applied to my chart. Example you can use is, you can use the 20 period and the 50 period exponential moving average. As we can see, I'm using 20 period for the short term moving average and the 50 period for the long term moving average. This can help you identify overall market trend. Next, we have to add the RSI, which is the relative strength indicator, to your chart, and this helps us. This is a momentum oscillator that measures the speed and change of price movement. It is typically set to a 14 period over look back. This is a 14 period look back. This is the settings for your RSI, but you can still adjust this based on your trading time frame. The RSI will help you confirm the strength of the trend and identify potential overbought and oversold region. First of all, we start by identifying the trend. We have to look for when the short term moving average, this blue line, crosses over the long term moving average in an uptrend, while in a downtrend it crosses below the long term moving average. When we have seen a crossover in a bullish scenario, we have to see the short term moving average, which is this blue line, cross over the long term moving average. It signals a buying opportunity. When we notice our buying opportunity, we have to confirm from our RSI. We check the RSI to ensure it aligns with the trend. In an uptrend, we look for an RSI value above 50, and in an uptrend in this area, you can see the RSI value is above 50. This is at 60 in this area. When we confirm the alignment with the moving, and is moving towards 70, not just in 50, it's moving towards 70, we can confirm the alignment. While in a downtrend, it has to be below 50 and moving towards 30. When we confirm this alignment with the moving average, we enter our trade. Once you have identified the strong trend and momentum confirmation, enter your trade in direction of the trend. For example, when we see a bullish crossover in the moving average and we see the RSI above 50, we consider entering a long position. When we enter our trade at that area, we saw both trend aligning. We would always manage our risks by applying our stop loss. We set our stop loss order to protect our common capital. A common approach to setting our stop loss is just below a recent support level, and as you can see, this was the last support level at this area, the last swing low. We will set our stop loss just below that level. In case of a selling trade, we place our stop loss above that level. Let's look for a selling opportunity to make us better understand what we are talking about. Now we can see a selling opportunity in this area, and first of all, we will spot that our short term moving average crossed below the long term moving average, and it aligns with our RSI below 50. And as we can see, at this area where the crossover happened, it was below 50, heading towards 30 region. This is where we enter our sell trade at this area. When we enter our sell trade, we can enter when price comes back to our moving average. We set our stop loss just above the previous swing high. This is where we set our stop loss to. Remember, we have to monitor and exit our trade. We have to keep an eye on the moving average and the RSI as our trade progresses. If you see any sign of trend weakening, such as the moving average decides to cross back over, you can decide to exit your trade. Or when you notice your RSI is coming back to the oversold region, you would exit your trade. When you notice your RSI is trading downward back to your oversold region, this is a perfect area to exit your trade. So if we had taken this trade, we would have been on 1:5 risk to reward ratio by this time. Remember, no strategy is foolproof and the market condition can change rapidly. Always practice proper risk management and be prepared to adapt your approach as needed. With consis ten t application and refinement, a simple momentum strategy can become a valuable tool in your trading arsenal. Alright traders, we have come to the end of this video. If you like this video, why not engage with us in the comments below? We want to hear about your experiences. If you found this video helpful, do not forget to like, subscribe and turn on the notification bell so that you wouldn't miss out on more trading tips and strategies. Thanks for watching and I will see you in the next video.